Let's bring in David Asman of the Fox Business Network. So, David, how can student loans be responsible for a slowdown in the housing market?
Well, again, we're talking about one section of the housing market, which is the first-time buyers. And of course, they tend to be younger people definitely younger than 40, sometimes younger than 30, but people who have a lot of student debt. I think that this is one of the unintended consequences of the government trying to get involved in every aspect of your life.
New regulations on the mortgage market. Is that what you think?
Not only housing regulations, but also the push that every American needs to have a college education to get ahead. And not only the push for that, but backing that up with tax dollars, both in terms of loans and grants. Look at these numbers. Student loans in 1981 totaled $7 billion. By 2013, that's the most recent year we have figures, it was $105 billion. These are inflation-adjusted figures now, so that is a huge increase. And federal grants, that's another aspect of all this. Federal grants increased from $6.4 billion a year to $49 billion a year. But focusing on the student loans, we now have $1 trillion of student loans outstanding. The number of folks below 30 who have $50,000 in student loan debts outstanding has doubled in the past 5 years. And these are the folks who have to pay that off if they want good credit standing and if they don't think they're going to get a government bailout. And they have to pay that off, and that means they have less money for mortgage payments.
Is it also, that's the personal issue of not having enough money to put down your first payment for a mortgage, for example. But how did the banks view student loans? Because at a time, student loans was thought of as different debt, not necessarily debt like you owed money on a car, for example.
Well, the other part, of course, the government not only is trying to give everything that everybody wants to everybody with tax dollars, and there's not enough tax money to go around for that, but they also want to protect everybody from everything. And first they wanted to protect first-time home buyers, and that led to the subprime mess, and we saw how that backfired. Now they want to protect banks because of the fact that the financial crisis almost ruined the country. There was the too big to fail thing, so they had the bailouts, and now they have all these new banking regulations that are meant to help the banks and make sure that they don't go into a crisis mode again, but at the same time they have tightened loans so that it's more difficult if you have student debt outstanding to get a mortgage.
But if you have to choose, and you're a dad, right?
I am indeed. And my daughter's living at home, by the way.
Really?
Kind of plays into this story.
Well, we've done several stories, and we probably know from our personal lives as well, that if you have a higher education, you have a higher employment rate.
Yes.
And right now it's very difficult post-college to get a job. So there's a lot of choices and decisions going into further education because of potentially getting a leg up on getting a job. So, if you had to choose between the two, between being able to get your first home and go to a junior college or go through a full 4 years and potentially have a better chance to get a job, how do you make that choice?
You were doing this hand motion of the balancing of the scales, and the problem is when you're in a free market, there are millions of scales that are balanced in order to get the right mix. When the government tries to do things by federal order, saying, okay, we are going to do this because it's good for young people to have a college education, something gets screwed up in the mix, and that's what's happened. There are too many rules and regulations.
So what are you saying then, David, that they need to take back the federal grants because that would drop the cost of education?
The bottom line is that the ultimate goal of everybody getting college education is good. Student loans are not necessarily a bad thing, but what they have done, another unintended consequence, is all this money's been pouring into colleges and universities. What does that mean? That means that colleges and universities have been increasing their standard of living. College professors, Liz Warren famously was getting $300,000 a year for teaching one course at Harvard. They have dormitories now that look like fancy Holiday Inns. They're spending money like crazy, and college tuition is going up. So what all this new government money towards education has meant is higher tuitions, and that's why so many people under 30 have $50,000 or more of college debt. Even Ben Bernanke, the head of the Federal Reserve, said his son, when he graduates from medical school, is going to have $400,000 of debt. He's going to have to work his whole life to pay that off, and probably won't have a house because of that.
And you heard it here first. David Asman does not want your college dorm to look like a hotel. I mean, that's the big takeaway.
My college dorm, we were lucky if we had 2 squares a day. You know, things have changed quite a bit.
David, thank you very much.
Absolutely,
Appreciate it. John?